Hi guys, this is Gettess. I'm here with the Market Sense for the week of October 23rd, 2018. The charts in this presentation are from the Trade Navigator software, which is kindly provided to us by Gettess. And in looking at a weekly bond market chart here, you remember back 4 weeks ago now, we said this looked like an exhaustion bar. And we've gotten a little rally, sort of a sideways rally out of it. And what I really think is critical is the 139.16 area. That's the upper moving average here. I don't expect that to be exceeded. I expect that to be resistance this week. But if it does get exceeded, and especially if they close up there, that's kind of an indication that this may be a rather important low, or at least a low of some degree. I really think the greatest likelihood is that we just kind of get a little sideways pattern from here. In fact, perhaps sideways for several weeks and create a little base of some kind, which we could either go up or down out of. But that's my anticipation, is that they've been swinging pretty good, well, all year and then some. And I think they might quiet down a little bit here. However, they're not going to do that if stocks continue to fly all over. And especially if stocks weaken, we could see a rally back here in the bond market. The green moving average there in the middle is 138.02, and that's kind of the linchpin for the week. I expect them to, if they remain above it, that'd be bullish. If they go below it, that'd be bearish. And if they go below it, they might head down to the 136.30 area here, the lower moving average. If that doesn't hold, I don't think the old low will hold either, although they may only go marginally lower. But I'm really thinking that 138.02 is kind of critical. Above it's good, below it's bad, and that's how we'll judge it. But again, if stocks weaken substantially, you could see flight to quality buying come into the bond market, and they could go above 139.16 and, well, just kind of take off. Stocks, well, they're showing signs of a little nervousness here. We've got the big break here, and then an inside week, a lot of volatility, but an inside week. This week, this lower moving average really shouldn't be resistance. I mean, we should be looking at the 28-26 level somewhere in here as being resistance. But instead, they've gone and they've actually not held support at all, and they've taken out the lows. Now, here's the funny thing. When you get a big washout like this, the classic way that the market will bottom is that all the markets across the globe will dump. They'll all close weak on the day. And the S&P will open the next morning even lower, usually right at the low of the last 24 hours, and then recover from there. That is not exactly what they did Tuesday. Instead, they went lower overnight, but then they opened well off the low, and then went and took out the lows substantially, but turned and closed back near the high. Not my favorite way to make a bottom, but it is possible. It's possible. And if that's a low, then the green moving average at 28.26 is definitely in play. And even up here to this upper moving average, which is way up here around 28.90, look at the volatility we've seen. If they're going to turn and recover from this low, they might be all the way up there this week. That's a possibility. It's also possible that they go lower. And if they do go lower, I don't really have anything till the 26.25 area, and that's off of a monthly chart, which I don't have to show you right here. But if they do break, I don't want to assume that they can't go lower, because 26.25 is a very distinct possibility. But for now, we got to see if Tuesday really was a low, and it could be. So, but if it is, they should rally kind of like right away Wednesday, Thursday. Shouldn't be much hesitation. So that's what we've got for you today. I hope you can find something